I'm often asked, why do I need insurance? And I can fully understand the reasoning behind that question. Because if someone talks to you about insurance and they say, oh, you can have £100,000 worth of life cover and it's only going to cost you £10, that could be expensive if you don't actually understand why you need to have it. So something I've used with many clients over the years is what I'm now about to show you, and I hope it might help you. So we're looking at potentially have two partners. Partner one is on £30,000 per year, and partner two is on £20,000 per year. Now everything revolves around the house, whether it's rented, mortgaged, whatever the situation is, whether it's single, partners or a family, but everything revolves around the house. So here we have the house. A question I would ask both partners would be this: do you have any children? For this particular example, they're going to have 3 children. So we have child 1, child 2, and child 3. I would ask the question, what ages are your children? And again, for this purpose, they're going to be ages 1, 3, and 5. So age 1, age 3, and age 5. Now the next question that I always ask, and again, see if this is for you, see if you need insurance. What age do you think your children are going to be dependent until? Now the question that most parents come back with is they'll be dependent forever. Right. But let's hope that's not the case. But let's say they're going to be dependent to age 21, which in my experience seems to be a good age when most parents would hope that the children are standing on their own 2 feet. So we're looking for the children to be dependent up to age 21. Now, with the youngest child currently being 1 year old, that's going to mean that they're dependent for 20 years. Now, often we talk about jargon in insurance. What is the term of the policy? Basically, what is the length? And people sometimes have great difficulty in answering that question or what they might need. But in this instance, my potential clients have told me that they feel that their children are going to be aged and dependent until age 21. Therefore, the youngest child to be 21 is going to be 20 years. Now, what we have to do in this to show the problem to the couple is this. We have to take partner one's earnings of £30,000 and say, if you lost those earnings, if you died, and a lot of people will have gone out this morning, gone to work, who don't return home. Unfortunately, it happens every day of the week. If that happened to my couple here, 20 years loss of earnings is going to put a £600,000 shortfall in this couple's financial budget. Now, how I arrive at that is quite simple. It's 30,000 times 20 years. So if this partner died, their partner, wife, is going to have a £600,000 shortfall in their financial arrangements if this partner died in year 1. Similarly, if partner 2 died and the same situation was in reverse, there's going to be a £400,000 shortfall. This is a major problem that most people have not thought about. So the first thing I would be looking at in this particular instance is to make sure that partner one has £600,000 worth of life cover and partner two has 400,000. That covers the financial shortfall in the event of death in year one on this situation to replace the lost earnings. It's not going to replace the partner, it's not going to stop the grief, but what it will do is stop the financial problem. Now, I've just used this example in one instance. It could be a single person, it could be a couple with no children, it could be a mortgage. But this is always my starting point.